Hey, what's up guys? I'm Adrian Ramirez. Hope you guys are having a great day. Before I start, help me out by smashing the like button and subscribe. Today we're going to be talking about Stamps.com and why it crashed so much. Ticker symbol STMP. Stamps.com provides easy, convenient, and cost-effective internet-based services for mailing or shipping letters, packages, or parcels. You would think that business is great since e-commerce is growing and the demand for shipping is as well, but Stamps isn't doing good. It's actually doing the reverse. It's doing real bad. The stock has been getting crushed in the stock market. A share of Stamps is priced at $47.62 right now. Let's check how the stock performed today, July 15, 2019 in the stock market. It didn't do as bad, it was just down a bit. Let's check how the stock performed in the past week. You could see the stock moving up a couple of dollars. In the past month, the stock has actually gone up by around $7, which is great, but now let's check how the stock has been treating investors in the past 6 months. Brace yourselves guys, cause this ain't pretty. Jesus Christ, the stock is down by $125.75. The stock is down 72.5% since January 16, 2019 when the stock price was $173.37. This graph is crazy, it's nuts.
What are you doing, Mark? I'm out. Wow.
That is not all though. Let's now check how the stock has been doing this past year. Warning, viewer discretion is advised.
Fatality.
Moment of silence right now for all the investors. The stock is down by a drastic $221.88. The stock is down 82.4% since July 16, 2018 when the stock price was $269.50. Stamps' all-time high is $284.45, so it is currently down 83.3% from its all-time high. Jesus Christ, it dropped just as much as Bitcoin when it crashed. I want to disclose that I don't own any shares of Stamps. I can't imagine being an investor and telling my wife about this. Honey, we're down by almost 50%, but we're good. I'll just hold. It will come back up after the next earnings report. Promise, babe. Honey, we're down 50% after the company ended their deal with USPS. I'm going to hold. I can't sell now or I'll cement my losses. Honey, we're down another 50% after the company only grew their revenue by 1.83% for 2019. And the company slashed its 2019 earnings forecast as well as projected further declines in 2020 and 2021. By the way, honey, we just got a margin call. My wife would probably divorce me on the spot right there. I'm just playing. I would probably sleep in the couch for a month though. I'm just joking. We don't even have a couch. So what the hell happened to Stamps and why did it drop by so much? I kind of mentioned it already, but I'll go further into detail. Stamps ended a key partnership they had with USPS. It is important to point out that the stock was already down almost 50% before the company announced this devastating deal breaker. As you guys can see from this graph, the stock was down way before the announcements. The company announced that an exclusive deal with the US Postal Service would not be reviewed on February 22, 2019, and the stock dropped by 50%. During its 2018 fourth quarter earnings report, they predicted large declines in its financial performance in 2019. Anytime a company predicts a decline in their financial performance, that stock will drop by a lot. This kind of news really scares investors to the core. The company stated that they need to work with other parcel and mail carriers such as United Parcel Service, FedEx, and Amazon. Executives said that its customers were asking for and requiring shipping options beyond what the post office was capable of offering, so the exclusive nature of their agreement no longer worked. Chief Executive Kenneth McBride said the following: "Our customers can no longer survive on just the USPS, and we don't see that as a viable option for the next 5 years." So basically that was our premise. It's like, no matter what, this company can no longer be exclusive given the trends in the shipping market. I can see the customers wanting more options, but what about the shareholders, man?
We're supposed to help our people, starting with our stockholders, Bob. Who's helping them out, huh?
Whether it was a good decision or not, only time will tell. The shareholders got roasted with this though. The decline would easily be considered as the stock's worst single-day performance in nearly 20 years of existence at that time because the stock was actually going to drop even more. The company said in its announcement that it expects earnings to be chopped nearly in half and sales to decline from 2018, in large part due to the end of the revenue sharing agreement with the post office. Stamps.com executive said in the earnings call that the negotiations between it and the USPS broke down over the issue of Stamps.com exclusively selling post office shipping products. Stamps.com insisted on having the ability to sell competitors' products, but the post office said it would kill that deal. Chief Executive Kenneth McBride said the following in the earnings call: "It's a done issue for us unless exclusivity is taken off the table, because we have to embrace other carriers now. We can't afford to continue to just be exclusive to the USPS. It's just not in the best interest of our customers. And if our customers can't receive the best solution, don't get the best offer in the market, then they will leave us and in the end we will lose no matter what." Chief Executive Kenneth McBride said said in the conference call that the company hadn't entirely severed its relationship with the USPS and will still sell stamps along with other services. The company plans to work with the post office in segments of the market where they offer a solution that's in the best interest of the customer. The company also wants to work with carriers such as Amazon and others to build up a portfolio of 40 US carriers and 450 carriers worldwide. According to McBride, Stamps.com is correlated closely with e-commerce trends, and once it sets up deals with additional carriers, the company's growth and revenue will reflect the e-commerce sector as a whole. He said the following: so if you're looking in longer terms, once we have additional revenue deals in place, whatever those economics may be, ultimately what the growth and revenue is going to be predicated on and correlated with is going to be e-commerce trends. And those look to be systematically quite strong. I understand that, and it's a great plan, but it is yet to happen. We can all agree that this drop was devastating for investors, but it wasn't the final blow for the stock, unfortunately. Stamps.com dropped as much as 52% in trading on Thursday, May 9 after the company slashed its 2019 earnings forecast, as well as projected further declines in 2020 and 2021. Investors that were holding the stock hoping it could finally make a rebound were hit the hardest. Investors were practically obliterated by this. The company announced on its first quarter conference call that it expects to take a hit due to uncertain contract changes that its partner companies have with the United States Postal Service. The devastating hit comes after Stamps.com said in the previous quarter that we will no longer partner with USPS. CFO Jeff Carberry told shareholders on the earnings call, "We have very recently become aware that the USPS is currently renegotiating the negotiated service agreements of several of our reseller partners. While these are ongoing negotiations with uncertain outcomes, and we have limited visibility given that the negotiations are being conducted between the USPS and our reseller integration partners, we believe it is reasonably possible that the margins associated and earned by the resellers as a result of these negotiations will begin to decrease around the second half of 2019. Basically, what happened is that since Stamps.com wanted to work so badly with other parcels and mail carriers, USPS is now all of a sudden renegotiating the negotiated service agreements of several of their reseller partners, drastically affecting the margins associated and earned. Trying out other parcels and mail carriers wasn't really worth it, right? I mean, I can't even believe the CEO wasn't fired for this. Not that I want him fired, but just look at what happened to Papa John. Papa John's stock went down and he was fired. Or, I guess, replaced. On the other hand, Stamps.com stock went down 50% 3 times in a row.
Triple kill!
Stamps.com issued a 2019 earnings guidance with a range of $3.35 a share to $4.85 a share, a 35% cut on the bottom end of the range from its previous guidance. It's important to point out that Wall Street expected Stamps.com to earn $5.42 a share. Zach Cummings, let's just call it Zach or my video will get demonetized. Analyst at B. Riley said the following about the situation. The stamp management team was completely caught off guard by the USPS proposed changes to the reseller program. Although reseller agreements have been a source of scrutiny in recent years, it was surprising to see the USPS take such action given that reseller agreements have been a key contributor to the USPS shipping volume growth over the past 10 years. CFO Jeff Carberry told shareholders on the earnings call, "Although we do not provide guidance beyond 2019, the current U.S. proposals as we currently understand them could also result in additional meaningful reductions in margins earned by resellers in 2020 and 2021. This in turn could have a significant impact on our revenues and earnings in those years. This is why the stock has been completely obliterated. The company believes that in the short term, the company's stock will suffer, but in the long term, they will thrive. As I said before, only time will tell. Although investors were obliterated by the downfall, there are people that shorted the stock or bought puts that made bank. It's crazy how you can make money whether the stock goes up or down. People that bought near its bottom at around $33 a share are now up after the stock has been rebounding. Hopefully it doesn't crash by another 50%. Right, guys? Personally, I'm not thinking of buying any shares of Stamps at all, especially when they say that the revenue will continue to decrease in 2020 and 2021. God, that sounds awful.
I'm out.
I only invest in companies that continually keep growing their revenues quarter over quarter and year over year. There is just a lot of uncertainty and risk investing in Stamps.com for me. Anyways, that's the end of the video. Now you know why the stock has crashed by so much. Let me know what you think about Stamps.com in the comments. I want to disclose that I don't own any shares of Stamps.com right now. Also remember, this channel is for information and entertainment purposes only. I am not a financial advisor and all investments involve some degree of risk. Please invest responsibly and do your own due diligence. See you guys. Bye.